Welcome to class students. In this module, we'll be looking at South Africa Financial Sector Conduct Authority, Prudential Authority and Insurance Act. South Africa South Africa Financial Sector Conduct Authority, Prudential Authority and Insurance Act. Module content: Introduction, Financial Sector Conduct Authority, Prudential Authority, functions of the Prudential Authority, licensing, procedures for application across various financial institution types, information to be submitted with an application, processing and notification. So I'll take the module's content again. Introduction, Financial Sector Conduct Authority, FSCA, Prudential Authority, PA, functions of Prudential Authority, licensing, procedures for application across various financial institution types, information to be submitted with an application, processing and notification. So introduction. In South Africa, Twin Peaks Financial Regulation Model the Financial Sector Conduct Authority (FSCA) regulates market conduct to protect customers, while the Prudential Authority, housed within the South African Reserve Bank, focuses on the financial stability of institutions like banks and insurers. In South Africa, the Twin Peaks Financial Regulation Model, the Financial Sector Conduct Authority, regulates market conduct to protect customers, while the Prudential Authority, housed within the South African Reserve Bank, focuses on financial stability of institutions like the banks and insurers. So the Twin Peaks Financial Regulation Model, they focus on market conduct to protect the customer, while the Prudential Authority, housed within the South African Reserve Bank, focuses on financial stability of institutions like banks and insurers. So the Insurance Act 18 of 2017 provide the legal framework for the prudential regulation of insurance businesses, contemplating the work of the PA. Financial, that is Prudential Authority, Financial Sector Conduct Authority, that is FSCA, role: regulate the conduct of financial services providers to improve market conduct and protect financial customers. Establishment: was established under the Financial Sector Regulation Act (FSR) Act 9 of 2017, starting its operation in April 2018. Successor to replace the Financial Service Board (FSB), Prudential Authority (PA). Role: promote the safety and soundness of financial institutions and enhance financial stability. Location: it is located within the South African Reserve Bank. That is, the Prudential Authority is located within the South African Reserve Bank, that is SARB, and its mandate is responsible for the prudential regulation of banks, insurance, financial conglomerates and certain market infrastructure. Legislative foundations: operate under the Financial Sector Regulation Act (FSR) Act 9 of 2017, Insurance Act 18 of 2017. Purpose is to provide a legal framework for the prudential regulations and the supervision of the insurance business in South Africa. Alignment is supports the mandate of the Prudential Authority by setting out principles and standards for financial soundness, governance and operation of insurance entities. Implementation: the PA published prudential standard under this act and worked on the conversion of insurance licenses to align with the new regulatory regime. What are the functions of the Prudential Authority (PA)? Number one is licensing. The PA processes license application in terms of the following financial sector laws: as stipulated in the Schedule 1 of the Financial Sector Regulation Act. We have the Bank Act 94 of 1990, the Corporate Bank Act 40 of 2007, the Financial Sector Regulation Act 9 of 2017, the Insurance Act 18 of 2017, and the Mutual Banks Act 124 of 1993. So they are involved, the process license application in terms of following financial sector stipulated in the Schedule 1 of the Financial Sector Act regulation. So all application are assessed in terms of the following. The application are assessed in terms of the objectives of the PA, that is the Prudential Act, the public interest, financial and other resources available to the applicant, ownership, governance, risk management, and internal control systems, information and accounting system, compliance with the prescribed legal structure of the entity and prudential requirements. So all application regarding licensing, regarding functions of prudential authority are assessed in terms of objectives of the PA, the public interest, the financial and other responses available to the applicant, ownership, governance, risk management, and internal control system, then information and accounting systems. Compliance with the prescribed legal authority of the entity and the prudential requirement. These criteria represent the minimum requirement that an applicant will need to meet for the authorization or registration under the applicable financial sector law. Depending on the circumstances, the PA may refuse an application on other prudential grounds not specifically listed above. So we want to look at the procedures for application across the various financial institution types. What are the procedures for application across the various financial institution types? We have the pre-application consultation. The PA may conduct a pre-application meeting with the prospective applicant for after receiving an inquiry or request for a meeting via the PA website or telephone telephonically. The pre-application meeting provides a prospective applicant with an opportunity to discuss their proposed business plan. It will also allow the PA to highlight any areas the applicant might need to address. The applicant will have the opportunity to ask questions about the authorization process. Before the initial meeting, the applicant will be required to prepare a brief high-level summary of its business proposition as a reason why, as a minimum, the information brief should contain a reason why the applicant wants to establish a relevant financial institution, the applicant's initial business proposition and strategy, including a business plan, the product to be offered, how the product will be offered, and the target market. An indication of the sources of the funding, how the applicant proposes to fund the business and whether it has any investors and a fund in place. Details of proposed owners and controllers as far as they are known. Corporate governance, including details of structure, board, senior management and governance arrangement as far as they are known, and a project plan including overall and lifetime, and a timeline of applicant plan to set up the financial institution. So these are the procedures required to set up a financial institution. So we want to look at the information to be submitted as an applicant or with an application. Information and supporting documentation required to be submitted with an application is set out in the applicable financial sector law. Submission of application. The financial application signed by the chairperson of the board or the chief executive officer of the applicant, including all the required information and supporting documentation as set out in the annexures, would be submitted to the PA. All applications must be submitted via the Umajo solution, that is the solution for the purposes of submission, and Applicants will first required to create and register a profile on the solution, and only once the information is complete or verified by the PA may an application be submitted. We want to look at the processing and notification. All applications are processed within a reasonable time, having regard to the particular circumstance of each application, including the completeness of the information and the documents submitted by the PA to the PA by the applicant. The PA may seek additional information from an applicant if this is necessary to assess the application. The PA does not need to deal further with an application under applicant until the applicants have provided the additional information. The PA will make a decision independently on whether or not to grant an application, while the PA, that is the Prudential Authority, will make the final decision on the application. Section 126 of the Financial Sector Regulation Act (FSR) Act stipulate that the PA may not issue very suspend or revoke a license unless the Financial Conduct Authority has concurred. The PA will accordingly obtain the FSCA concurrence prior to issuing any license. The PA may impose condition for authorization or regulation at the time it is granted, and may impose vary or revoke condition for authorization or registration thereafter. When the PA grants an application for registration, to notify the applicant in writing, registration will be published in the PA's website and where required in the government gazettes. Thank you for listening.